Okay, I wanted to do just a quick video on what we call naked in the market investing. Now, naked in the market investing is part of the 3 sleeves that make up defined outcome investing, but this is the one that has the most risk and sometimes the most return. Now, what is naked in the market? Most of you are used to it. It's simply buying stocks or mutual funds or ETFs, and you're on the roller coaster of the market. So if the market crashes 30% or 50% and you've got $1 million invested, you're going to lose $300,000 to $500,000. Now, why would you ever want that? Well, over the long term, the market goes up and has given us a pretty good rate of return. In fact, it's one of the best ways to beat inflation over the long run. So naked in the market plays a very important part, but it works best when you combine it with target and cap defensive strategies where you don't suffer the entire loss and you get to buy the dips. Now, how do we look at naked in the market? We tend to believe that when you buy things on sale, it's a better purchase. And that is what Warren Buffett would call a value-based investment approach. Buying things that have good cash flow, good companies at an attractive price versus maybe buying a very exciting company that is massively overpriced. There's a lot more downside risk. So when you tilt a portfolio toward value, you tend to pick up extra returns over the long run. Now, you can also pick up extra returns by taking out some of those very highly capitalized, so big companies with low profitability tend to underperform. So by taking some of those out of your index, you can typically do better also. So there's about 5 risk premiums that in total we're trying to capture as we design portfolios, and those are 2 of them. Now, if you look at a Vanguard, they're looking at diversification as the only thing that's kind of adding value. We need that too, but there's 4 other ways to increase your returns. So when you design your portfolio, slant toward value, but then I think you need one other component, and that is dealing with mega trends. So mega trends right now, I would say, involve AI, which we all hear about constantly, robotics, which is going to change our world over the next 5 to 10 years along with AI, quantum computing, which we hear about much less, but it is a powerful force that's happening, and then some of the distributed ledger technology known as blockchain is also a 4th one that I would consider part of those mega trends. Now, the need for energy is emerging also because of AI and robotics and how much energy they take up. So some areas in that sector can be very powerful too. We like to add a little bit of this to the value base to capture some of those powerful growth phases, because sometimes growth is really going to propel an economy forward and you don't want to just not participate. So having the right mix of growth and value is how you create a good portfolio, and then of course keeping those expenses as low as possible. So that's how we look at the naked in the market section, and in the subsequent videos, if you like, follow, and share, we will make sure that we explain what we call target investing, and then after that, capped and buffered investing. Those are the 2 other components that work with naked in the market to make a powerful stock allocation. So thank you for joining me today, and we'll see you in the next video.